So what I want to focus on is support and resistance. And where we're going to start is just on the simple sides of understanding what support and resistance actually are. Because I think that when you understand, when someone says, well, what is support? What is resistance? I think when you get that, then you understand what it is. So the one thing I see a lot of people doing is not even understanding what they're looking at, right? So in other words, you're told to look at something and then you go and look at it, but you're not really sure why you're even looking at it or what the significance of that is. And that's not what we want to do, right? What we want to do, you know, I really think that we should understand why these are important. So one of the reasons why I like RSI so much or MACD in their specific periods when I utilize them is because I understand what they are. I understand how they're created. And that makes a huge difference. So here's Tesla, and we're going to use this for our example today. And then, of course, I'll take other examples, and we'll go from there. Now, when you have a support line, okay, that support line is generated very simply by where we see demand. That is what a support line is. So if you think about a support line, that is where you're actually seeing demand for product, okay? And that's substantial, and you should just remember that. So when you think support, I want you to think of demand, right? So support equals demand. And just real simple, just if you think about it from that perspective, it's going to kind of make you understand like, oh, okay, well, that's why you buy there, because there's demand, right? Now, that is what you get when you're holding it, right? Now, when you start flipping those levels and those levels become more of a problem, right? Such as here or here, okay? You're getting into resistance, right? So why do you have resistance there? Well, you have resistance because you no longer have demand at that level. Demand is a fancy way of saying you don't have buyers. So there are no buyers up here anymore. The people that bought, they've had enough and they think they might be wrong. And what they're trying to do into these resistance points, they're trying to get out at break even. Now, the reason why support and resistance work are several different reasons. There is some self-fulfilling prophecy to it, but the important thing is support is demand. When that demand goes away, you're going to get resistance, right? You're going to break those support when it goes away. And that resistance, you need to think about as supply. Now, this is one of the key issues on why when you flip these levels again, it's so fascinating, but resistance equals supply. So now we know that support equals demand, right? And resistance equals supply, right? Very simple concepts. Again, this is going to be really informal today. So if you have questions during it, just simply ask, not a problem at all. And I'll answer that question immediately. Let me see if this will just do what I want it to do. Do we want full screen? No, I just think we're going to get rid of this. And that might be a little bit better for us. So let's just see how that looks. I think I like that a little bit better. Yep, I like that a lot better. All right, so now we're seeing our support and resistance and supply area. Now, is this a major or a minor support? Well, the first thing to understand is what's the difference between a major support and a minor support, okay? A major support is going to be on a much larger time frame and is going to be involving several key spots that you've hit. So one of the things that I look for a support line to even be registered as a possible support line is you have to come down at least twice, right? So you have to hit that level at least twice for it to be even considered a support level. So here's your first time, and we're going to have to make these white. And okay. And here we are again, right? And there's our second time. So once I hit twice, I have, right? That line has been tested and proven. That's support. It's not up for debate anymore. It's a fact, okay? There are skills and there are art to technical trading, and there are just the very basics. Now, when you test a level and you bounce off that level and go higher, All right. What that does is that tells you that you have support there. If you have support there, what does that mean that you have? That means you have buyers. Now, if you understand that this is your support level, what is the significance of that? Well, that would help you, for example, set risk parameters. So let's say that you wanted to buy this bar right in here. You saw something that you liked, or you drove a Tesla and you're crazy about it, but you want to look at technical analysis and you get involved, right? You see a little pattern, you get involved, you buy this, and then you go, I really don't want to sell it unless the trend's broken. If the trend breaks, I want to get out of the way. So what you would do is you would take the lowest part of where that support is, which would be here, and that would be your stop loss. Okay, if you're looking at this as a position building or swing trade, right? Because of the time frame being a day. So now we know that support equals demand. We know that we have buyers here, and we know for a support level to even be considered a support level, we have to hit twice. Okay. Next, the more times that we hit a support level, the more significant that support level is. So that means that's twofold. Okay. So here we are, and we've hit that support line 4 times, right? You can see the 5th here and how that went. Now, when you've hit that level 4 times, that is indefinitely major support or a major support area. And the importance of that is you go from 2 to 3. Okay. And when you hit those areas for this particular time frame, that becomes major support. You come back and test again. So what some people will do once they have a major support, and this is how you can benefit from that, you have this doji right here. No, it's not really a doji, but you have this reversal bar right here, right? Here's your doji right on support. You hold, and then you make a higher high. Well, that's it. You're over the doji and you're into the gap. You would put the trade on, right? And whether or not it goes up substantially or not, but what you're doing is simply buying off of the top of that doji, and then this is your stop, right? And that's pretty much it, okay? You could actually even use a close below support, but for our purposes, we're just going to say that you are holding support, and then you're just simply waiting for a higher high off that support level. And when you get that higher high and you have that breakout, that's it. So here's your breakout. You're in a 215. At the peak, it goes to 236. There's 26 points at the peak. If you don't get out of the way, it comes back to support a day later, and you should be stopped out at support. No harm, no foul. But you missed the opportunity to make money. We'll get into that later. But what that means is when we flip this level on the top of the doji, what do we have? Well, we have a minor resistance, right? Now, why do we have a minor resistance there? Well, we have a minor resistance because that doji level right there, the top of that doji, is a spot that we need to pay attention to. Why? Here's resistance and here's the support. Support flips to what? Resistance. When you break that level and then you come back and retest it and you hold there, right? You don't know that you're going to hold yet. You need to make sure that you close up over that, which you never did. Therefore, it was not respected as a minor support level. Therefore, it flips and it becomes resistance. So now you have a minor resistant point right up here, and you have a major resistance point right here. So now you have 2 levels on a daily chart that are of consequence. Now, I want you to think about support and resistance lines in this format. Support and resistance lines, the weighting of those is predicated upon a couple factors, but mostly time. So if you take a look at the weekly, okay, so you want to start with your mammoth charts, right? So your mammoth charts are going to be when you're, let's do another name, okay? Let's take Apple, for example, and we'll find out some levels in here. So what you want to do is you want to look at a weekly or a monthly chart. Now, I would find for the majority of people that waiting every 4 weeks for a bar to form to make a decision on is going to be exhausting. And since we don't have to worry about not being able to turn, right? Larger accounts are going to want to use a monthly, right? Because they can't turn very fast. So they're going to want to know that the pattern exists. For our purposes, we're going to say a weekly is pretty much the absolute brick wall, right? And you should really even think about it that way. What are houses made out of, right? And then you just kind of walk through the material that houses are made out of. That the strongest houses are brick or stone, right? Then wood, straw. If you think about it from that way, you're going to kind of walk down the level of significance of these support and resistance lines, just very simply based upon whether it's the week, right? Whether it's the day, okay, and how you're responding on a daily basis, whether it's the hourly, and we're going to get into smaller time frames here in a second, whether it's the 10-minute, and you just walk down the line. So by the time that you get to the 2-minute or the 1-minute, you're basically dealing with something that is built on tissue paper, right? Versus a weekly, which is built on stone. I guess stone's better than brick, right? So we'll just say from stone. Now, the significance of this is that by identifying these particular levels right here, 1, 2, what do we have the moment that happens? We have a support. Okay, we have support. Now, you don't know that you have support here. You have no idea. And then you kind of drill into that and you can even look back here, right? You could even go, well, here was a sign that you might, well, that was support and then we flipped it, but we didn't really test, right? We didn't really test the support level. So just because you flip from one level and one breakout, and I would be really clear about this, just because you flip from one level and push up does not mean that you have a support level or resistance level. It just means that you have a level and that level broke. You do not have knowledge. You might have an understanding that this level is important, but you can't really refer to it, in my opinion, as support or resistance because you just don't know yet, right? You haven't tested. If you don't test something, you don't know if it works. So what we do here is we have a complete, right, breakout, rally comes back, comes all the way back down here in June and tests that level, forms a doji and takes off. Okay, now you have a support level, comes to here, tests again right there. Now, when you test here for the third time and you hold for the third week in a row, you now have a major support level. So Apple right now is sitting on a major support level. So Emily's question is, do you ever use Wix for, do I ever use the Wix for a level? Yes. And there are times when, and we're going to get, that's nuanced and I can go over it now, but there are times where you look at my charts and say, well, he was using Wix before and now he's using the body. Now he's using the open or the close. And I'll explain why I do that. It's actually, might as well segue into it now just so you get it. And I can use MBD, sure. So what we're seeing and why would I move from the point where the algo's acting, right? We all know why that point is there to, or the buyer or seller, we'll just say it that way. Why would I use the open or the close? Well, the most important thing for me is how many times do I hit that level? Do I hit that level more than I'm hitting the levels of the wick? And that will tell me the significance of the move, right? And by identifying that, I can get a better price point. And that will give me a little bit of an edge, right? And what you'll notice in the way that I trade, Emily, is I'm just constantly looking at increasing my probabilities. That's all I'm doing, right? Very rarely will I say, that this is definitely going to happen, right? You always hear me put a caveat in to the point that people are like probably nauseated by the fact that then I say I have an opinion, right? Where I'm going with this is that you can use those levels and you can use these wicks to make those decisions. So now you can see here on the weekly. Well, what do we have here on the weekly? We have a stone wall that we are sitting on. Period. It is not debatable. And let's talk about this. It doesn't matter what stock. I'll go over MDB. It doesn't really matter. I can do it on any stock at any time. You see that hammer? So now I have a hammer. So now we know a couple things about this chart, and I want to keep it basic, but I might as well point this out. See how the body of this, right, is above that bar? So if you were to look at this Tuesday, Wednesday, Thursday, do you think that you would have thought that was going to happen, right? Probably not, but here we are. So now we have all this as rejection. So now I have rejected under here twice. Okay. So now if I'm somebody that was carrying a large short position in Apple, as you're talking to someone that was carrying a large short position in Apple, I have to start thinking that I could be wrong, right? I have to start looking at this and going, I'm on a major weekly support level and I can't close below it. It doesn't mean I don't close below it, but the probability of me closing below it after I have 2 wicks down here so far, right, is getting less and less every single time that this happens. And I'm moving higher and higher up the body, but we can get into that later. So I have to respect that level, and I have to respect that I might be wrong. But the one caveat that I want you to take from this is that when you're looking at these levels, it is support when it's tested. It is major after 3. And I'm going to come out with a course. It's going to be free, but I'm going to put it out there. And I'm just going to tell you part of the course is going to be ranking your support and resistance lines. And how do you rank them? You're going to rank them by the amount of times that line is tested. And then you're going to rank them by the time frame. So in other words, we're going to refer to the weekly as stone, right? We'll say that the day is brick, right? And then you just kind of go down the line over and over again, whatever you want to use. You want to use steel, whatever you want to use. But just understand weekly, daily, hourly, all the way down the line, less and less and less till you get to a 2 or 1 minute, and then you have tissue paper. There is something to that night, and we're going to get into that in a moment. So, and I'll show you how to determine. Pardon, let me take a drink of water here. So Knight's comment, what about my saying, let me see if I can put this out there. Oh, I have to do that on this. So Knight's comment is, what about the saying, knock on the door enough times, it will eventually open? That's 100% accurate. Okay. And we're going to get into that. I'll get into that as how you can determine when that door is going to open. I'll give you a great example of that. I can do it on JP Morgan. So I noticed that this week. So let's drill into these questions. So Emily's has answered, can you use the MDB chart? Sure, brother, anytime. Let's get into it. So here's MDB on the weekly, right? And what we're going to see is we can pretty much see some of these levels, but let's put some of them in, right? We can just kind of eye them up and see them, but let's just put this in. So if we look at this, we can see a couple things here, right? We can see the giant left shoulder, the giant head, and the giant right shoulder. And that in the bowl of soup gets us a bowl of soup, right? We've identified a pattern that everybody else can see. But what we're noticing is, here we are on the wick, on a doji. Here is the test without the close below it, right? Hits it, undercut, dragonfly, rally. Okay, 2. So now you have support. Okay, sure, Sarath, I'll do that next. Okay, and then here you are on the weekly. So, right now, what happens? Now, what don't I have here? Okay, I have a support level. I don't have a major support level, right? I have the potential for major support, and it failed, right? That's how you would have to look at this. You would have to look at this and go, I had the potential for major support, 1, 2, right? And I failed, okay? And when I failed, support becomes what? Resistance, right? Why does support become resistance? Because it flips from demand to supply. Someone pops up here, whoever bought here or here said, that's enough. I've had enough. I'm out. They just tap out. And that's what happens right here. And you can see how from then you just roll over. So if I was to be shorting this on the long-term stage, and I thought that this was something that could go down, I would want to be shorting as close to what? To 1942, right? Okay. And so you can see how that level flips. And we'll get into different time frames in a moment. And let's go through the Apple chart. So Knight's statement is the Apple chart is a good example. And let me pop this up so that we can see it in here. The Apple chart is a good example. So I thought it broke the support level and fell. Now I'm not sure how to read it. Well, let's talk about how to read it. okay? Because this is significant and this is something that we should really understand. So right now we are not through that stone wall, right? We're just not. Stone, steel, whatever you'd like to use. So then you drill into the daily. And then you look at the daily and go, well, yeah, we're over, but we're not really over. Like that's not a huge power move. That's more running into it and we haven't tested yet. So how would we know, right? How would we know if we're going to go up or we're going to go down? By looking at this. So what you would do is you would identify the single largest break down previously that happened or the single largest break up that previously happened to identify this. So what you would do is you would take this bar, right? And let me explain why. This bar has the most range on it, right? Let's click this magnet. I think that works, right? Let me just drop that right down. So you would take the single greatest bar on the breakdown or the break up. Previously, before this bar, it was what? This bar, right? And then it made a decision, okay? So here we are. Now you have that range. So if that is my range and that is my breakdown bar, then what I would do on the daily is I would need a close on the daily, okay, above this, right? I would need a close on the daily above this. And then I might be interested in buying for, overnight or the next day. A higher high is usually when somebody will act, but we don't know what's going to happen here. We don't know. We could just gap down. It wouldn't be the first time, right? I mean, look at what's happened here already, right? So let me show you exactly what I mean by that. So why people are looking at this and going, oh, well, geez, I want to, we broke down, but now we have this bar right here. I'm going to buy. Well, we never got over this bar. And then the next bar was this, right? Same exact thing could happen here. Now, we have to understand that, it's not an exact science, but that could absolutely happen. Let's get rid of one of these. So that's what we would want to see. But what else could we do to answer this and see if we could come up with a better solution? Well, we could go into the hourly and go, oh, well, that's interesting because here's the hourly, right? And that made it really clear, right, where that bar is. And so maybe what we do is just look at that hourly and see if that can give us any more color. Oof. Well, it's not a brick wall and it's not steel or stone, whatever we're using before, but it's really solid treated wood, right? And we're holding this level right in here. Matter of fact, we broke down, right? And then we tried to break through it. So that became what, right? How many times we try to break through it and we're unable? 1, 2. So that becomes what? A resistance level. Breaks through that resistance level, right? Test that down. 1, 2, 3. I have major support right in here, right? Major support on an hourly on Apple. So what we're seeing here, oops, let me use this one. I really need to understand. There's a way that I can just automatically click on this and it works. But so now we've tested there, right? You have this little test right there. You have another test right in here, right? Then again here, these are all hourly bars. You have a little breakdown without the lower low, right? So you have another test right here. So right now, when I come back down to earth, I know I have a problem there. But if I wanted to get really specific, okay, I could actually move this right up to the top of that right there. Okay. And now I'm using, just as Emily asked, why would I do that? Well, if I look at this level is respected way more than the other level. So when I start seeing how it's respected more, I want to pay attention to that level. Well, how is it respected more? 1, 2, 3, 4, 5, 6, 7. Okay. So by looking at that, instead of having a level where I'm hitting 5 times, I now have a level that I'm hitting 7 times. And that becomes way more important to me, right? So that is a stronger level. Now I'm just going to walk you through something. You see this 125.43 because we're doing Apple. We might as well do Apple. So here we are on the level, right? On the 10-minute. So what was I doing the other day? Okay. And what did we say the other day when we were trading? Right? I said, if I get back down to this level and I flip it again, I'm getting out of the majority of the short, right? That's exactly what I said. What happened right here? We broke below, formed a hammer, and flipped the hammer. That was it. I'm out of the trade. I'm not getting what I want. Okay. So how many times are they going to do this to me? So instead of me waiting for the stop to trigger, I'm getting out because of the rejection of support. So wicks are price rejection, correct? Let me keep going through these questions. These are all great questions. So the next is, so that's how I would read Apple right now. Okay, this is a support level that I would definitely be looking at, this 125.43. And this is a huge, huge level up here at this 130.90. But we don't know exactly yet how significant that's going to be, right? We just don't know yet. But we do know that this level is pretty paramount. So that's how I would look at Apple. Now let's go to NVIDIA while we're doing the support and resistance lines and talk about NVIDIA. And let's start on the weekly basis with NVIDIA, just like we did again. And then I'm going to get into the question about if you knock on a door long enough, what's going to happen. So now you should be able to see this pretty clean, but let's just put it in. Oh, that's why I click off of this. MK, I'll look into that. I think you're right. I think that's exactly how I can do it. So here we are at the low of this wick right here. Can't close below it, can't close below it, but we don't know that yet. But now we do, right? And now look what happens at that level a week later. We have a little battle going on. We have formed that 3-bar pattern. We break that 3-bar pattern, and then we'll go from there, right? And then we'll be able to see if that breaks down. MK, I'll look into that. I appreciate it. Thank you. That's very helpful. It would save me a lot of time. But you see how your breakdown? So now that is potential resistance. But we don't know if it's resistance yet. We know we broke a key level, right? That's all we know. Okay. We just know we broke a key level. We don't know if it's resistance yet. So then we're going to flip, and then we're going to go back and we're going to push through it, right? So this is no longer resistance or considered resistance. Right? And I should say that again. This is no longer something that you could consider as a resistance point. You have to consider that it's a key level that we broke, but we have a support level there. Why do we have a support level there? I have no idea why they picked that specific number to hit right over and over again and to not break for 2 years. That I can't give you an answer to that. But I can tell you that when it was tested here on this little 3-bar reversal, we eventually backed right through it, and we didn't stop. We never like hit it and came back and then went, which I'll show you an example of in a moment. Now you're pushing, right? Comes back down, retest that level. So that's how I see NVIDIA on the weekly. And that's how I would look at it. And that's exactly how I see your major support. So I hope that at that NVIDIA weekly, how did you decide to use the wicks versus the body? Well, that was pretty clear, because how many times am I hitting my specific level? Right? You could, I'm not going to confuse everybody, but you can see very clearly that I hit the level in here 1, 2, 3 times, right? So if I'm hitting in here 3 times, is that more significant than if I'm hitting here? And the answer to that is yes, it is, right? So the fact that I've touched this level 3 times in here, right, is way more significant than just taking that low. Okay. Then I tested here. Then I can see that it's been a battleground here, how it was just, they ran right through it, and then how it was respected for the past 2 weeks. Right. So that's why we can get into tech and I can get into the specifics. What you want to do is you want to see them walking up. Right. And I'm going to walk through the ES chart yesterday, so I can go through it. So here you are in NVIDIA, right? So until I flip another support or resistance line, it's completely irrelevant to me whether or not we see, it break that or not. It is what it is. But if you're looking at a weekly chart, you have to go out pretty pretty far. So just keep that in mind. I mean, you're not going to want to wait to see 195 for whether or not you get involved with the idea, but let's just keep drilling into it. Now, if you look at that on a daily, and we'll get rid of this line, and we're going to just remove that, you can see pretty clear how this looks a little different, right? Battleground though, battle hitting, right? And then it becomes support, right? It gets a little more glaring. And then you just kind of drill into the different time frames, and then you can look at those different time frames as well. Okay. So again, the more times you hit a level, the more important that level is, right? The more times you hit that level, the more important that level is. And that's what I would focus on more than anything. You want to see how many times you're going to hit that level and go from there. So let's just go through these questions. When you say knock on the door enough times, will it eventually open? Yes. So there's the saying that if you knock on a door long enough, will it eventually open? Yes, that is very true. And it's definitely something that I say a lot because it's very accurate. And I'm going to give you an example of that, and one that very clearly will tell you whether or not you're going to open up or not open up, right? So here's JP Morgan, okay? And we're going to go to the weekly on JP Morgan, and we're going to pull this back. So you have levels in here, and you can see them pretty clean, but let's just get to it. Okay, so here's JP Morgan on a weekly. All right, now let me zoom in on this so you can get this even cleaner. Boop, boop, boop. There we go. You're right in there. Okay, so here we are, right? And it's not really falling here as much as it's hitting the top of this bar, right? And what's the significance of this? So let's get into this. So you're hitting the open and you're hitting the high here. So I have two data points here. So I'm going to use that in determining what part of this range I'm going to use. So I'm using the open of that week, and I'm using the high of this week, okay, to determine where I'm going to set that after I've already seen it, how it's established. Now, I'm confirmed by this, right, in here by a test of support here. So now we know that this is flipped, right? We now know that support is resistance. How do we know? We know this was a level of interest. And now we know that that level of interest has become what? Tested and held. Tested and held, right? So that becomes major support. Now, you can go back a little further and you can actually even see, and that's probably not going to be exact, but you can even see how you could come back to here and use that opening price back here in 2019, right? So you could actually argue that this is resistance and resistance, right? In here, right? Not major resistance, because I believe that we flipped it, right? So if we flip it, I mean, you could argue, I guess here it'd be 1, then 2. Sure, you could do that. Actually, you could do that because here's 1, 2, 3, right in here, right? So you have major resistance in there. 3 points, tries again, fails, 4 points, right? Finally flips it. Okay. So then you come here to JP Morgan, test, breaks, tries to get over. Okay. This is a battleground. Okay. These are not, they're exact numbers, but they also stay as areas and battleground areas. And that's exactly what happened right here. We have the rejection and we see that the resistance is still in place. We try to break out up here and we can see that the resistance is still in place. Now, the saying, if you knock on a door enough times, that one of the key signs that you're going to see that door open is when you have these reversals. And let me walk. Here's our level. And let's get rid of this and this. Okay. So you could see your level in here, right? And you can see the significance of that level. Okay. Just coming straight across. I don't even need it right here. Let's get rid of that one as well to show you this. So how do I know that that door is going to open? Or how do I know that that door has the high degree of probability of opening? Well, that door is using, right? This door that we're knocking on, we're now using the top of this as the top of the flag. Okay. So if you have the top of the flag and I measure here and I measure my flag pole, which we would say starts here, we'll say, right? And we'll bring this down to here, right? We can see clearly that we're not even 50% over that. Okay. So I have a high tight flag right against resistance. And this is my low end, right? So now we know where the low end of it is and we know where the high end of it is. So the chances of this not breaking that are pretty thin, right? I think you're going to flip it. Now, what else do I use to determine if a door is going to break or not, right? I look at the index. So I will go to the index and go, okay, are we holding key levels? And have we been holding those key levels? And what you'll find is if you drill into them, right? Like take this, for example. Here's the XLF, right? And you go to the weekly, and we're just going to use the weekly here. And I use the top of this that's back here, right? And you come across, and there you go. Okay, resistance, right? Here, resistance. And then what does resistance become, right? Resistance becomes support. Okay. So now we have support spots on our resistance line. Now, if I see something like that and I start seeing us curling like we're doing on the XLF, and I can see that we're no longer in that downtrend on the XLF, right? Because we're no longer in a downtrend, right? We can all agree. I would assume that we could use the top of that wick and then say that that is a resistance spot that we are rejecting, right? 3611, here's the doji broke down, retest, never got to that level. This is why higher lows are so important. So this tells us pretty clearly that we have major support, and major support has been tested over and over again. Therefore, that when we go back and take a look at this, we could look at JP Morgan and go, well, that's probably going to break. And that's where the saying, if you knock on a door long enough, it eventually will open. Okay. Just the way that it is. So there is a saying, the more times you hit a level, the more that level gets defined. And when that level is finally broken, it's vicious, right? So when you finally get back over this level, right, that has been resistance for 2 years in here, right, you're going to have a substantial move to the upside. Okay. And that's no different than something like this, right? Confirming. So what we did on Boeing, and what was so powerful about Boeing, was here's my W, okay? And then I finally flipped that after test, and then boom, right? So once you have these patterns and you can see them, and you can see here pretty clear, let's do Boeing on the daily, and you can see that W. But now let's just talk about this so that you get it, right? 1, 2. So now I have resistance. 3, I have major resistance, right? And this is on a daily chart. Okay, but here we go. 1, 2, 3. Then we flip and we don't confirm, right? Come back under, look like it's going to under test, and then we break out. And that was it. Okay. Then we had the confirmation move the next day, and that was the end of it. We got involved. So when you understand those levels and the pressure that's around there, when that pressure alleviates, that's when you can get a move off of that. Now, before I run out of time today, there's one other part of this I really want to go through this. Let me see here. Let me just make sure I get all this. Go through all these. Sometimes they break support or resistance level, go in the opposite direction by faking the move. Yeah, that happens all the time. So one of the key things that I was trying to point out with this on Friday, and somebody even alluded to it, and I really want to talk about this. And then I want to point out one more thing that you can utilize, and then I'll take questions. And we're going to cover this exact topic for the next 2 weeks in greater detail, where I'm going to keep adding nuances to it so that you really get this. because when you start doing this on much smaller time frames for your trading, you're going to notice, especially for those that are day trading, you're going to notice a huge difference if you learn how to do these properly. Now, somebody said something in here. Here's Knight. Thank you for the levels on ES yesterday. I wrote it up from 39.02 to 39.25. It covered a portion of my earlier losses. So first, you're welcome. Second, let's walk through that, right? Let's walk through that trade. And now let's do this on well, let's start with an hourly, okay? So we're going to pull this up on the futures market. Now, we should be able to look at this and see these levels. Well, let's just put them in a little bit so that we can see where we're at, right? So here's 3,800. So we know that 3,800 is a what? Major support level, right? 1, 2, doesn't close below it, just shakes everybody out, and then rips, right? 3, and then we test in there. Interesting spot that you start lifting your support level. We're going to get into that later. But then support no longer is 3,800, is it? Right? Since the beginning of the year, support has become 3,820 for some reason. Why? We don't know, but there it is. Now it's 3,820. Now we come back and we look at this and go, okay, well, 3,900 is right here. Well, we get to 3,900, rejection, rejection, rejection. Okay, that's why when you're shorting into rejection and you're buying into supply, right? In TradingView, click on auto on the bottom right side of the screen and it will adjust the chart instead of scrolling up and down, zoom in and out. On the auto. Oh, click auto? And what it will do? Oh, that's easy. Oh, okay. Oh, I like that. All right, cool. Thanks. I have to play with this way more. But so what we're seeing now, thanks, Knight. That's helpful. So is MK's. I'm really looking forward to being able to actually just click on the button and have that happen with what MK said too, to be honest with you. So here we have our point. And the point that I was getting at the other day and what I was alluding to was, look, we're not breaking here. Now, does that mean that I was going to run out there and buy these? No, but you have traders that are just literally long only, right? And they're just playing these levels. They're looking for little inflection points. They're getting them and they're just playing the rips, whether it's the futures or the options market, right? This is all they're doing. And by drawing these levels and drawing them accurately, you can get a better understanding of what's going on. Now, this was our rip on the hourly chart. We know why this happened, right? We were talking about it extensively. We see the reversal. We see the reversal of the reversal. So I just want to say something about this while I have everybody. When you have a reversal like this, and then you come down and you have another major reversal, and then it just completely envelops that reversal, you have a very powerful move on your hands. Okay, just be aware of that. But so where did we go? So we came up to what? Well, we came up to this level in here, which is what? A minor support level, right? Right in here. We'll see that right there, that is actually minor resistance. And then it does what, right? Becomes a spot of becomes a spot of interest to see if it's going to become resistance or support. Now we form this high tight flag, and this was simple from here. From once you're in and you're over 3,900, okay, it was very easy for me to just post like, hey, you're through 3,900, you're going to 3,920 and you're going to test, right? So if you go look at the comments, or I might even got on speaker, I don't remember, but you can see that pretty clearly, right? So now you have a definable range, okay? And I just want to lay this out. This is not us saying the market's going to rip or the market's going to fall apart. This is us actually using analysis to make a decision, right? That's what we're doing. We're using analysis to make a decision. I held this level. I'm going to act on it, right? No different than when I was looking at Apple and going, okay, well, I held this level again. That's enough. I'm getting out of it, right? I'm not going to sit here and just wait for this to happen, right? Or this to happen and bleed me out. So I'm just going to get out of the way. Now, understanding these levels and the significance of these levels, even on something like, let's take ES the other day. Hold on one second. That's wrong. There we go. So even someone like myself on ES. So what I did was right into here, right? I tried a short, right? But I knew as soon as it rejected that area, see where I'm at? Rejection comes back, rejects that area, and then it breaks down right here, right? So I try a short, then I get this bar, and I'm like, oh no, no. So the moment that I break through that, I'm out. I'm done. I'm out of the trade, right? And by doing that, it allows you to do a couple things. One, you can start seeing if this is support, resistance, and then you can just take the other side if you want, or just stay out of the way. It doesn't really matter. But defining these levels and getting good at it, proficient, is everything. Now, before I take questions, I just want to throw something else out there so that people get this. Okay, so let's do NVIDIA again and look at NVIDIA. Now let's look at NVIDIA on a weekly basis. Okay. And I just want to introduce this concept, and then we can talk more about it, and I'll answer everyone's questions. So I just really want to talk about this concept so that we are all on the same page. We can see our level right here, here, and here, right? Now, the significance of these levels is going to vary greatly. But there is one thing that you want to look at in regards to it. You want to look at your level of interest when you're at these spots. You want to see what your volume is at these spots. Do you see any spikes? And in this particular case, we don't really see anything, right? That is glaring. But if you see spikes on those areas, anything like that, right, you want to pay attention to those areas. All I would say here is on the volume side, you had huge buyers, but you don't really have any outsized spikes. Here you kind of do, but not really. So you're constantly drilling into these, and you're looking to see if you have some kind of outsized move on that area, right? So if we come to here and we look at this bar right there, there looks like an outsized buy that was then just blown off a week later. And you just kind of go through it, but you don't really have anything of substance. You have a huge buy here, right? And you can see that and how that rejected, or how that followed through rather, and was able to hold that as support. So you know, the significance of this is the bigger the volume on that move, the more significant that particular spot is, right? That's how you need to look at it. Okay. And we'll go from there. And, you know, we'll see. So, all right, let me go through all the questions and go from there. Let's just see if I have everything answered. I've seen people draw supply and demand zones. Is that similar to what we are doing here? It's the same exact thing. Works or price rejection, drawing lock. I definitely want to look at that drawing lock, MK. And you decide to use what's first the body. Okay. Can you say more about identifying a 3-bar pattern? Yep, we did a whole video on the 3-bar pattern. It should be in the educational room. I did a whole video on it. And I would take a look at it and go from there. So if you take a look at this, I forget what name that was. What was it? NVIDIA? So I'd have to go and take a look at this. I don't remember which stock it was now. Maybe it was NVIDIA, or maybe it was, oh yeah, it's NVIDIA. Here you are. So what you're looking at on these 3-bar patterns, okay, and I'll just walk you through it very quickly, but I would watch that video. So you have a long bar down, right? And basically what these are just bullish harami sometime that just don't fire. So breaks, rallies, breaks. Okay. So I have 1, 2, 3. The important of that move is that this particular pattern, right? I never got up more than 25% of this bar, right? So the rule is 50%. So as long as you're not up over 50% of this bar, you have that 3-bar pattern. So that therefore, the moment that you break below it, it becomes a sell signal. Same thing on the upside, becomes a buy signal. Okay. Same exact way that you would look at that, it becomes a buy signal if it does that on the upside. So just something to think about. But there's a whole class I did on it. I actually think we did more than one. So let's go through this. I'd love to see your chart levels for ES and NQ Sunday night futures trading purposes. Yeah, I'll have them out. I'll definitely have those out, and I'll start doing that in the. I didn't realize the amount of people in the room that are trading futures and options on the index. I didn't realize it until I started doing the onboarding coaching calls, which everybody should do. Once I started doing those and talking to people, it became apparent to me that way more people are just looking at my index levels. So I'll definitely work that into the private video, and we'll have that lined up for you before the futures market opens. I'll get it out. I'll get that video out before it opens, and I'll try to get the newsletter done before the futures market opens tomorrow. Q. What else do we have here? And to help teach us, can you provide with specific chart tickers to chart, and you can release the answers a week later, like a quiz, some sort of practice so we can learn? That's a great idea. That's a really good idea. So what I can do is let me think about that night and how to do that, and let's do that. That's a really good idea. For those that want to. And I'll release a bunch of tickers, and then we can go over them, and then we can go over them next Saturday on why I picked those levels. Remember, this is it's an art, but there is a science to it. And I think there's a lot of science to these support levels. But I think people would like that. I think it's a great idea, Knight. Thank you for that. Would be interested how you define the stop on KHC in the newsletter. So with something like KHC, and let's get into that, right? So it's obviously working. And, once you're into these red bars, that's it, right? You're probably just going to continue to push. And that's what we're saying here. We're just saying this continue to push. But what is the purpose of this? Well, the purpose is for us to just kind of understand where we are in the pecking order and what we're saying here. And you can kind of get an understanding of how this is going, right? But so how would you define this? Well, let me see if I can get onto, let me just see something here. Bear with me 1 second, and I'll see if I can do it this way. If I can get on that other system, I would really like that, but I got to figure out what they want me to sign. Something with I don't want their futures there. I thought I had it already anyway, but no matter. So let me just pull that up real quick, pull up my notes on it through one of the older newsletters, and then I will, I'll get to it in a moment. I just want all the details in front of me. So I have $1.50 on it. Yeah. So this is how I did it. Input and length. No, I want EMA. Can we drop that in there? Perfect. So a couple things is how I came up with it. So first and foremost, I always look at volatility, right? And by looking at volatility, I realize that Heinz is not an extremely volatile stock, and these are the ones that are going to work, right? They just are. So what do we have here? We have a stock that starts trading up, right, into it, right? And then after it starts trading up into it, what do we do from there? Okay. So here we are, and then we start trading up into it, right? But we see that break and we want to be involved. So how do we get involved? Well, see this ATR, average true range. Okay. So what I like to use is and a lot of people don't use it this way, but I like to use on the average true range, just to get a sense of it. Sometimes I'll use a 20. Actually, I do like using the 20 a little bit more than the 14, but you're going to get right around that same level, right? 75. So what was appealing to me was that break to here is 2 times the ATR, right? So the chances of me getting stopped out are pretty thin. Give me 1 second here. So the chances of me getting stopped out there are pretty thin. And if I got stopped out at that 39.20 on that doji, I'd be 2 times the average true range on Kraft. And I wanted some more leeway because 70 cents on a $40 stock's not a lot. It's just a very low beta name. And that's exactly why we got what we got. So that's how I got there. That's the long and the short version. So yeah, I like the homework idea for those that want to do it, talk about it. How do you get into a trade by breaking the resistance? Do you prefer, well, it depends on the trade. You look for the pullback and retest, Emily. Well, I'll get to that. So you look for the pullback and retest. right? That's what most people, that's what a lot of professional traders will do anyway. And if they miss it, they just go on to the next one. So let's get rid of this and let's go through some of these questions because they're really good questions. So how do you get into a trade breaking the resistance? Sure, in a smaller time frame. Okay, let's take Microsoft, right? And let's look at Microsoft on a 10-minute chart, right? So all we're doing with Microsoft here is trying to figure out where we're going to get in and where we're going to get out. Okay, that's all we're going to try and do. Where would we get in and where would we get out? I would be using, if I was day trading, I'd be using smaller time frames, right, to determine those levels. Now, those levels are going to be pretty clear, but if you just start drilling into them, right? So let's just say, for the sake of argument, right, that I want to be short Microsoft, okay? So what I would do here, and I can actually even do this with, Emily's trade. I don't really want to short Microsoft into this. I want to cover my Microsoft short into this, some of it. You really want to short Microsoft the moment it breaks up here into this and cover some of it, right? That's what you want to do, right? You don't want to be shorting into support, right? You want to be shorting before support, okay? So another example of this is, if let's say you know that there's support here, right? So I make this higher high right here. So now you have another resistance level, right? I make this break right here. Okay, well, that's a signal, but so is this breaking right up in here and then unable to get above it. So they're walking me down on the resistance side, right? You can see that. Then it cracks, tries to rally, can't get through it, tries again, but I make a higher low, can't get through it. Okay. And then what do I have the next day? Right? It gets right up to that level and it can't get through it, right? So now I am shorting. So if I was going to short this, I'd be shorting right into resistance. You want to short into resistance levels, right? Now, if I'm shorting up here, when it gets back down to here, if I'm just day trading, right? I can do this on a longer time frame, but let's just say you're day trading, right? And you can see this pretty clean right in here, but I could draw this a lot better. But for our purposes, let's just move this up just a little bit here. So you can see this. Yep, there we go. Okay. So right in here, you'll see that your top is here, bottom is here, open is here. But when you slam down, what do? Do you short this? No, you missed it. So when would you put that short back on? When you retest your resistance. So you retest resistance here, right here, right? So then you would take this and you drill this down into an even smaller time frame and go, well, there's the retest right there on a 5-minute. Well, then you would drill this down into even a smaller time frame, right? And then go, okay, well, that's it. You test, it's on, boom. Trade goes on up here. This little piece becomes your stop, breaking over that. And now you're in this trade and you're seeing what happens. And from there, it just kind of works its way down. You can kind of see this right in here, right? Those little levels. And again, see how it's breaking right here, right? So then what happens? Oh, I missed it. Well, did you miss it? Because all you have to do is see if that becomes resistance. Well, that became resistance here, right? And it became resistance here. So then you could put it on again. Well, I missed it. Well, this is resistance. So I could put it on here, right? And this time it just takes me out, but hits another level of our resistance and gives us another opportunity. And then we'd be trimming into this right here. And then we'd say, oh, we missed it. And then we'd short it where? Right at resistance. Okay. So that's what I'm trying to get people to understand. If you just look at something as simplistic as this, right, you can start quantifying this. And if you can quantify something, you can put risk and reward parameters around it. And if you can put risk reward parameters around it, then we just have to get into win rate. And that's it. You're done. So for me, like on something like this is why you'll notice if you see my statements and even the live post that Emily was putting on and what we were doing when we were shorting Microsoft, okay, rallies, starts breaking down, we're shorting, right? And I'm annoyed that I missed, really where I wanted to get off at. And then when this starts breaking down, I'm just covering into all this, right? What everybody else is piling into it, I'm getting positive slippage. So I'm out, right? And then you hit a higher high, and that was the end of the trade. And now you can see where your support is on that. It's right in there. Okay. So now you know where your next support level is. So if you're trading Microsoft, right, then you know where your levels are. I mean, you should be able to see your levels. Now, I'll leave with this and answer any more questions. Right. If you look at this, you want to do the day. If you're day trading, you're doing 2 or 5 minute charts, right? And you're using the previous day or 2 days ago, the furthest, right? That's how you're doing it. So, but I can get more into it, Stefan, and we will get more into it, Stefan. So I would not look at a weekly and say I have to get involved, right? So like me looking at a weekly and going, I need to get involved here on the day trade. That's not what I'm going to do. What I'm going to do is I'm going to look at the weeklies as guides and going, okay, I should have a short bias or a long bias. Now, if I'm a long-term investor, right? And let me just find this 173. I think it's right there, right? So there you are, 173, right? Bonk, 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 right? You can see that that's our area, bonk, right? So that's major, okay, support now for this name, right? So if I break this, I have a problem. That's going to give me a bias. The bias that I'm seeing right now is that here I am where I'm hitting a low, right? That is now a support level, isn't it? Right? That just happened to fill right into that gap right in here. It just happened to fill into that, didn't it? Right in there, didn't it? Right? So we filled the gap, test. Now I'm making what? A lower high. So looking at a weekly, I would have a long bias. I'm not going to day trade off that. I might invest out longer term on something like that, but I need more than that, than just that weekly. And then you can see how we're acting here and how we're responding to those on a daily basis. Now, I might look at that and I might drill into an hourly on this and see how it's going, but the hourly is going to give me better signals. If I'm just looking out at the week or I'm looking out 2 weeks, right? I'm going to get much better signals. Like all of a sudden 160, 176, 78 becomes significant, right? Because we're having trouble with it. And this level is pretty significant, but is it as significant as this level on the hourly? Probably not, right? Bonk, 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 right? So I hope that helps. Now I'll do now, and then we'll wrap this up. And I'm going to think of your questions. I'll think of homework, and we will do this we'll do this again next Saturday and go from there. But if you're looking at now, I don't know your time frame you're asking about. Let's just do it daily. I think that'll be the cleanest. Kind of go from there. That's toast. You got major problems there now. Anything like this has major problems, right? Resistance, support, test, support, test, support, test, support, test, lower highs, right? I mean, it doesn't get any cleaner than that. You better stay up. You have to stay above that. You're hanging on by your fingernails, but you're there. There's other things that are there too that make me think that it's toast. Here, I'll show you one. Right. So you're riding it here, testing it. Looks like you're going to break out. Breaks that level here. So to me, you have to watch these. Like tech is not out of the woods. I think you're heading back to that 337. Looking at it, you can actually see the pattern. But this is your level. This is the most important level right now. 364.24. All right, I am out of here. If you need anything, just reach out and we will go from there. Hope this was helpful. All right, everybody, have a great day.